Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will enter payroll transactions into QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are with the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem, and we're going to be entering payroll data into the system. As we've discussed before, there's a few different ways to process payroll, and it's really one of those areas you want to spend some time on to see how you want to process the payroll, because it can be a complex system. Even a few employees can be fairly complex to process the payroll just because there's so many components that we have to deal with now in terms of withholdings and other types of regulations with payroll. So therefore, you want to consider whether or not you want to have the payroll to be done through the QuickBooks system. There's a few different payment options to do that. It's going to be an add-on, in essence, to the QuickBooks system to process the payroll and decide whether you want to work through that system in order to do it, and or have some outside system process the payroll for you and work that system. If you put the information into QuickBooks, once the payroll is set up, we can go through the payroll system and it'll look something like this. We'll enter this data into the payroll system for each of our employees and process the payroll. It's really the setting up of the payroll that's going to be the main problem, and then processing the payroll is not too difficult. Then we have the financials or the statements that we have to record, the 940s and the 941s quarterly, and that can be a little bit tricky. If there is a problem with those types of forms, then it can be a little bit tricky to try to figure out what happened if something's not reconciling properly. And so therefore, even with a couple employees, it might be worth the time to take a look at some help with that, an outside service to process the payroll, and or if payroll's getting a little bit more complicated, if you're dealing with multiple states or something like that, those are times when you might want to look somewhere else to get some help with the payroll processing. This is the QuickBooks Online system, just to give an idea of, or this is the QuickBooks Desktop, just to give an idea of what the payroll entering system would look like. This is the earnings for Adam. We have then the salary and then the withholdings. We're not going to deal with anything other than just the federal withholdings to get an idea of what the withholdings will do. Federal withholdings will be the same for all of the United States. However, the state withholdings will of course change from state to state. The concept is the same for both withholdings of taxes as well as any other type of withholding, 401k or something like that. We're going to remove that money from the check. However, it's required for us, however much is required for us to do that. And then we're going to have, this is the total amount earned, in this case by Adam. This is what was pulled out. This is the net check. This is being calculated by the system, and if we have everything set up, then QuickBooks will in essence do this automatically, do the federal and Social Security and Medicare, and we may not even know what's going on, and the system will kind of calculate those items for us, as well as the employer portion, Social Security and Medicare. What we're going to do is go through this and do this as if we're going to get the information from a third party and then enter that data in. Even if we get a third party to do this information to process the payroll, we still need to put it in our system if we're properly going to track the payroll within the QuickBooks system. So we're going to recalculate this one more time and get an idea of it just on an Excel worksheet. And then we'll talk about, well, what if we had a third party do it? How are we going to put it into our system? So here is Excel, and we're just basically going to process the same information we just saw that it might look like in a QuickBooks process. It looked kind of like a payroll stub that we saw, and now we're just going to enter that same information into this system. This is the kind of worksheet you might get from a third party if they were to process your payroll for you and then give you the information, or if we were to calculate the payroll manually and process it in this format. So we're going to say that we have Adam here, and we're going to say that Adam's total earnings here is a salary, so it's the same each month of 4583.33. Then we've got to pull out the Social Security, Medicare, and federal income taxes. Those are the three United States taxes that basically are payroll taxes that are required to be pulled out. Now, if we have state taxes, they're going to act in a similar fashion. If we've got benefits like 401k plan, paying for health insurance and that kind of stuff, same concept. We just need to determine how much to pull out of the check, and then we've got to reduce the check. These amounts are going to reduce the amount that they're going to get in terms of total payment. So this is what has actually been earned by Hamilton. Social Security and Medicare are typically kind of flat taxes, the rate meaning the rate is going to be somewhat standardized. And the rate doesn't really matter because it could change, but the concept will be the same, meaning we're just going to take this number times whatever the rate is. And I think it's 6.2% right now, so let's try that for this calculation again. That could change over time, but we're going to take this times 0.0062, and something like that would be the calculation. And so we're going to say that that's going to be the 284.16. And then the Medicare is going to be a flat rate as well. Typically, generally, that's a general rule. I'm not going over all the rules for Social Security and Medicare, but that's going to be the general rule. I think it's like 1.45%. So we would take then the total earnings times 1.45%. 0.0145 for 1.45%, like that. And that will give us our Social Security of $66.46. And then the income tax, which is what we all owe at the end of the year when we do our income taxes, or actually we often get a refund at the end of the year. And the reason we get a refund is because the withholdings that we're taking out of the paycheck, typically often add up to more than what is actually owed for the year. So this is going to be a complex. It's not just a flat tax. We need to know a few things. We need to know marital status. We need to know how often we're going to pay in terms of weekly, bi-weekly, monthly, how often we process the payroll, in other words. And we need to know the amount of income. And then we'd basically have to look at a table or have some computer system to help us to find out what the amount will be. We're not going to go through that process. We're just going to say that it came out to be $720. So that means that the net pay then is going to be 4583.33, what he actually earned, minus 284.17, minus 66.46, and that gives us the net check that we will have here. So this is what he's actually going to get. That's what was actually earned by Adam. So let's do that calculation one more time. I'm going to say that equals the net check is this number, what was earned, minus the Social Security, minus the Medicare, minus the income tax that we're taking out of the check. That's the check that will actually be received. So I'll make this green. This is what they're actually going to get. Now you would think we'd be done there, but we also have to pay the Social Security and Medicare, and we kind of like match it. You can think of it kind of like a 401k matching thing. This Social Security came out of the paycheck, theoretically. And this Social Security is going to be coming out of the employer bank account, or it's the employer paying it, not coming out of the employee check. It's going to be the same amount. It's going to be this Social Security amount, and the same will be true for Medicare. Now, again, there's some other kind of rules with caps and whatnot with payroll taxes. We won't get into all the ins and outs of payroll taxes, but that's going to be kind of an overview of how we're going to process the payroll. And that will be for Adam. Now note that that's not too bad, but if for one employee, but when we have a lot of employees, it starts to accumulate. When we do this a bunch of times, it starts to accumulate as we do the quarterlies. It could get a little bit more confusing, a little bit more dicey. So we're going to say that we have now Erica. We'll do the same thing. Erica, we're going to say that she worked 20 hours times, actually she worked 40 hours and gets $20 an hour. So that's going to be $800. Social Security, once again, is going to be a flat rate, 6.2%. So we're just going to say that earnings times 0.062. That's going to give us the $49.60. And then we're going to say Medicare is a flat rate. So we're going to say that 800 times 0.0145, which is 1.45%. And that's going to give us the $11.60. There's going to be, I'm not going to calculate the income tax because, again, we'd need marital status, we need how much was earned, we'd need how often we pay, which is monthly, and then we need to look it up in a table. So we're going to say that this is just going to be what it is, which is going to be, we're going to say 110. So if we were to calculate the net pay, then we're going to say Erica earned $800, and then 49.60 was taken out for Social Security, 11.60 was taken out for Medicare, and 110 was taken out for Federal Income Tax, FIT, to give us net check of $628.80. So she's going to get $628.80 even though she earned $800 because she owes these three taxes, and instead of us giving them to her for her to then pay, the Fed makes us take it out of the paycheck before paying and giving the net check. So then we're going to do that calculation one more time. We're going to say this is the $800 minus the $49.60 for Social Security, minus the $11.60 for Medicare, minus the $110 for Federal Income Tax. You'd think we'd be done there, but we're not, because we have to have the employer portion, Social Security and Medicare. So that's going to be this item, the 49, and that's going to be another $11.60. Okay, so now that's for the two employees, and we could think of this of employee by employee. When we process the payroll check, even if we were to do this manually and say this is the net check we're going to give to Adam, we would still need to track this data, because we still need, or we require typically by law, to tell Adam that this is the amount they got, that's the amount they earned, and the reason they're different is because we took Social Security, Medicare, and income tax from the check. We need to give them a pay stub. So we can't just write them a check for this without giving them the detail of, the pay stub. And Erica's the same thing. We gave her that. We need to give her the detail. Now, when we enter this into the system, we could think of it as just one journal entry, one lump sum journal entry. This is the amount that actually is coming out of our paycheck, out of our banking account, I should say. But we need to record all of this amount into our system in some way. We could think of that as one lump transaction rather than two checks, as it actually is, by summing these up. If we sum this up, we can say that the payroll total was $5,383.33. That's how much the payroll expense was total for the two employees. The Social Security that we're going to take from them totals the $333.77. The Medicare totals the $78.06, and the income tax totals the $830. That means the net check is either going to be this, and or we can do the same calculation, the total check minus the Social Security minus the Medicare minus the income tax. So that's going to be the same number, or this plus this is the same number. And then the Social Security that we're going to pay, we're going to have to match, and the Medicare that we're going to have to match. So you can see, even with two employees, we can get the payroll system to kind of calculate this for us and just make these numbers work. But most businesses probably don't fully kind of understand what the payroll system is doing and how exactly these Social Security, Medicare, and income taxes are being taken out. And if the payroll system automatically does the calculation, that's great. But if there's a problem, it can be a little bit complicated to figure this stuff out, because it's a little bit complicated of a system to figure out. In essence, we're going to take this as if a third party was to do this calculation, and now we got this. They gave us this, and we're going to enter this into our system. Now, we could do this by just saying it's one line item, by doing a journal entry like this, meaning we would just basically debit or increase, and we're going to talk debits and credits here, but we're going to increase the payroll expense by the $5,383.33, and then we would credit the payroll liability for what was owed, or what was taken out of the paycheck, which are these three numbers here. So that's the 124,186. That's going to be this item here. So if we summed up these three, it's 124,182. So 142,182. I just changed this number, was not correct. And then we're going to say the net check then would be the net check here. Now, if we did that would be fine. That would give us kind of like the detail of all of our employees grouped together. There will be a problem with that, however, in that we won't have the two checks that were kind of broken out separately or the detail. And it's kind of nice to have the two checks because we could then record these two checks and reconcile them when we reconcile the bank account. So we're going to actually put this in with two journal entries for the two employees. One, which will say that the payroll expense is going to go up by the 4583, and then the payroll liability is going to go up by the amount that we took out. And then the net check will be the net check that will decrease the checking account. We'll do the same for Erica. We're going to say the payroll was that. We took out this amount, 171, for the payroll liability because we're going to owe that. And then the difference is going to go to the checking account, reducing the checking account by the check. Now then we're going to have to do our side, what we are going to pay in terms of payroll taxes, which we're going to match the Social Security and Medicare. So that's the $350 for Adam that we're going to have to match. That's going to debit Adam and then credit the payroll liability. We're going to do the same thing for Erica. We're going to match this, which is the $6120 for the payroll expense and liability, totaling this amount here. So that's the process we're going to go through with this. And note that we have payroll expense here as the journal entry. It might be better called payroll taxes expense because these are the payroll taxes. These, although they're payroll taxes for the employee, are not payroll taxes really for the company because this is all part of earnings. This is payroll expense. This is the wages expense. This is all their earnings, this is their earnings that we took from them and paid their taxes. These, on the other hand, is our money that didn't come out of their paycheck that we had to match Social Security and Medicare for in accordance with the policy, with the law. So that's going to be the difference. We're going to go ahead and enter this now into QuickBooks. We're going to take this data as if we got it from a third party, this data, and enter it kind of like this journal entry, these two journal entries or four journal entries, into the system. There's a few different ways we could do this. We typically would use a journal entry to do this. So, most commonly we would go down here to this plus icon up top and go to the journal entry and record this as a payroll journal entry. And we saw that journal entry in terms of debits and credits. We'd have to use debits and credits to do this. Now, it might be possible for us to enter this in without the use of journal entries by just basically writing a check, and that's what we will attempt to do here to see this process. So we're going to have a check with a couple different accounts that we will write with. So again, we're going to try to avoid the journal entry. It might make things, actually, I think it makes things more difficult to avoid journal entries if you know debits and credits, but it could be a useful system to go through. And note that as we're not using debits and credits, if you can understand how the debits and credits are applied no matter what system we're using, then that'll help to just understand how the system works and how we can use debits and credits and not use debits and credits, even though the system is still basically using debits and credits. So let's go through this, and we're going to say we're going to write two checks to process this payroll. So I'm going to select the plus item. We're going to select the check, and we're going to put this information first for Adam, our employee Adam, and then for Erica. So we're going to say Adam, we could select the drop down and or just type in Adam. So there's Adam, employee. I'm not sure it's spelled greatly, but that's how Adam told us to spell it, so that's okay. And so we're going to say checking account's going to go down, and the mailing address, we're not going to have one at this time. We're going to process this as of the end of the month, which is 02/28/21, the date. And then we'll enter this information into our system. Now note that the system memorized what happened last time. So it's got this same kind of layout, which is nice. The numbers are going to change, but it'll say, this will give us an idea of what happened last time. And of course, accounting will be repetitive. Last time we did a payroll entry for Adam, this is what we did. And we can go back in here and kind of say, okay, what can I tweak to make this right? And of course, if this wasn't the case, but we know we did a payroll prior to this, we can always go back. That's the first thing we want to do. It's not always going to be exactly the same, but we can always go back to the prior transaction and say, hey, we're probably going to do something similar here. Let's take a look at what happened last time. So I'm going to go ahead and uncheck the print later here because we're just going to keep the check number. I'm not going to have a different check number. And then we're going to tab through this, and we're going to say that the payroll expense is going to be the other side of this transaction. Now, we're going to remember, if we look at the Excel sheet here, that he earned this amount. That's the full payroll expense, but the net check should be this amount. So we expect the net check to be this, and the payroll expense to be that, and then we got to subtract these out of it somehow. That's what we're going to do here. So we're going to say that the payroll expense is the total amount that he earned, which that's actually right because it's the same as it was last time. Nothing's billable. We're going to say the payroll liability, that's what we took from the wages. That's these three things. If we add those up, that adds up to, in this case, this 107062. So that's what we took out of the paycheck. We're going to say it's a negative 1070.62. And then we've got the payroll expense. Now this is really the payroll taxes, and what we're talking about here is our side. That's what we matched in essence for Social Security and Medicare. So that's what we're going to put there, and that's going to be, and this time it's going to be 350.62, and then the payroll liability is going to match that. So it's going to be a negative 350.62. So within our net check then, hopefully the amount should be that 351,271. So let's check that. So if we scroll up here, 351,271. So that's good. That's how much is actually coming out of our checking account. That'll be reducing our checking account by what we actually paid the employee. And then we say that the expense is actually this. So the expense is higher. That's what was earned. And then we reduced the expense by the payroll liability. So this is the Social Security, Medicare, and income taxes. If we left that where it was and we didn't enter these two data, we would still be at the same net check. Because really these two amounts should kind of be a separate journal entry. But if we did a separate journal entry, we couldn't use a check because there's no cash involved with these two. So we're just kind of using this check to record both the employee and employer portion. So now we're going to say the employee payroll expenses, which really kind of should be payroll taxes, but QuickBooks typically groups them all together when we process payroll within QuickBooks. So I'll keep with their, the way they typically do that. And that's going to be an increase of $350 for our portion of Social Security and Medicare, the employer portion. And then we got the payroll liability, meaning we owe that to the Fed. So these liabilities mean that these are what we owe to the Fed. This is what we took from our employees and therefore are holding on to, that we will now pay to the Fed at some point, in the government. And then these are our portion, the matching portion that we took. We didn't take from the employees, that we have to match, that we're going to pay to the government. So that's going to be the first check. And then we'll do this one more time. It's going to be great. Now, one more thing here. The check number, for some reason, I don't think that's the latest number. I'm going to change it to what I believe is the latest number. If I was to go check the register, I want to pick basically the next check that is in line. Usually it automatically fills out, but sometimes it gets messed up. Especially when we're not printing them, so we have to go check the check register and see if that's the case. So I'm thinking that's 1023 according to our problem. So I'm going to say save and new. Save and new. And we're going to do this one more time, and this is for Erica. So now Erica, we're going to take our register data, earned 800, but the net check, the amount of check that we want to actually record is going to be 628, and the difference is going to be this Social Security, Medicare, and income tax. So let's type in Erica. They're going to be employed. We're going to just drop down. We're going to type in Erica. And Erica, the employee, Erica Robinson here, not the customer, the employee. And we're going to write the check here. And it's populating the correct payment date. That's right. That looks like the right number this time. That's good. We're not going to print it. And once again, it's trying to guess what we want to do. And it's saying this is what you did last time. And it probably will be much the same this time, but let's go through that. We're going to say the payroll expense. The payroll expense, that's how much Erica earned, 800. That looks good. And then we're saying that we took out the liability of 170. Now I believe it's slightly different. We've got Social Security, Medicare, and income tax at this time, which is $171.20 this time. So we're going to change that. I'm going to say that this is going to be 171.2, and then we got so that would be it, basically. That would give us our net check, and that would be it. But we also are going to put in, remember, our portion. Just use this as a journal entry to record our portion of the employer taxes, which is the 6120 Social Security Medicare employer portion. So we will take those items, and we're going to say that this is slightly different. We're going to say it's 6120. And actually, because I don't think it was calculated quite exact last time, but 61.20, this looks more correct. Okay, so that's going to be it. And then the net check then should be this 628.80. So we're going to go back over here and say the net check, if we scroll up, it's 628.80. So what is this going to do then? It's going to record the payroll expense of $800. Increasing the expense, reducing the net income. It's going to say we took from Erica $171.20 cents for her payroll taxes and are holding on to that and are going to pay for her to the Fed what she owes. And then we have our portion of the payroll, and then the difference there is going to be a decrease in the checking account to what we're actually going to pay Erica. And then we've got our payroll expense, $61.20. That's what we are paying. That's another expense. It's more like a payroll tax expense that's going to increase the expense, decrease net income. And the payroll liabilities that we didn't take from the employees but still owe in the format of payroll taxes, because it's kind of like a matching type of thing. Okay, so let's save that and let's check out the reports and see if that does what we think it just should do there. So we're going to close this back out. We're going to go to the reports on the left side, and we're going to look at the balance sheet. Let's take a look at the balance sheet. We're going to change the dates on the balance sheet to the month of February, 02/01/21 to 02/28/21, and then run that report. Let's first take a look at the checking account. If we take a look at the checking account, we should see these two checks that we have written for our employees. So there's Adam Hamilton and here's Erica up here. They're a little out of order, but that's because they're all of the same date. So here's the Erica. It's in order by date, and then so here's Erica, and then there's Adam. And if we take a look, so if we look at either of those, that's for the check amount. And if we compare that out, then of course that's the check amount that is reducing the checking account. And obviously if we take a look at either of them, we're going to get back to our paycheck. Let's close that back out. And we're going to go back to our report, scrolling back up, and go back to the report summary. So that's going to be the checking account. The other side we typically think is on the profit and loss. So let's go to the profit and loss, which is the income statement, and profit and loss. So left side reports, profit and loss report. Change the dates to the month of February, which is 02/01/21 to 02/28/21, and February 1st, 2021 to February 28th, 2021. Run that report. So then if we scroll down, we see the income, the payroll expense. Now, if we select the payroll expense, we're going to see two items for each employee within payroll for this month. One will be the payroll expense for the employee, and that's the total expense, not the amount that we took out here. So it's not the net check, it's the total earnings for, in this case, Hamilton. And then our portion, our payroll taxes that we paid, are the two items. This one should be really payroll tax expense, but QuickBooks usually lumps them together, so we'll follow that convention. And then we have the total earnings here that are there. And the total earnings note kind of include the taxes that were taken out of the employee portion. These are, you might want to think of these as payroll taxes, but they're really part of this earnings of the employee. So those are going to be the items that we have here. So we got Adam Hamilton. Here's our payroll taxes, and this is his total earnings, not the paycheck that Adam got total earnings. And then we've got the Erica. This is the total earnings, and this is the Social Security and Medicare that we match on the employer side. So those are going to be those items. And let's see one more component here. Let's go back to the balance sheet. So we're going to go back to the balance sheet, go into reports. We're going to go down to the balance sheet, and we're going to type in the dates of February once again, 02, 01, 21, 2, 02, 28, 21, February 1st, 2021 to February 28th, 2021, and run that report. So there we have that, and if we scroll back down then, we're going to see in the liabilities section that we have the payroll liabilities here. So payroll liabilities, if we select those items, then we're going to see the payroll liabilities for Erica and Adam that we took out of the checks for these items. So this is going to be Adam's amount that we pulled out here. So if we take a look at our table, we're saying that we pulled out this, this, and this from the check. So that adds up to that $1,070.62. That's what we took from the check here. And then this is going to be our portion that we have to pay for Adam in this case. And then Erica, this is what we have to pay, or this is what was taken out of Erica's check, and this is what we have to pay. These three amounts are payments that we made. So these are reducing the liability, and those are payments we made for the payroll liabilities that were incurred in January. So we incurred payroll liabilities in January of this amount. We paid them with these three in February, and then we incurred more payroll liabilities when we processed the payroll in February because we're paying on a month-by-month type basis here. Hello, in this presentation we will enter payroll for the payroll period within QuickBooks Pro 2018. If you've been working along with us, we will be continuing with the Get Great Guitar problem. If not, that is okay. We will be processing payroll within the QuickBooks Pro system. If you have the backup file up to this point, you can go to File and restore the backup file, taking us to the data set we have now, allowing us to enter information to the current employees. If not, then you can watch along and see the payroll process that we will be going through. We currently have the open windows open. If you don't have that open, you can go to the View tab, Open Window List. We also have the Home tab open here, the only open window in the open window list. That can be found at the company and home page. We're going to go through payroll, quick recap of what payroll is, how it works in QuickBooks. There's a lot of options on payroll. So remember that QuickBooks itself has at least three payroll options. Those payroll options all providing a different level of service. Oftentimes the increasing level having to do with how much of the reports they're going to fill out in terms of quarterly reports and year-end reports, as well as added reports within the QuickBooks feature in terms of reports that can be related to payroll. And then of course the states. So the more complicated we have in terms of what state we are in and how many states we have, or if we're in different countries, then of course the payroll will become more complicated given the fact that those areas are going to have different requirements. If we're in a state, for example, that only has federal taxes, well, that makes it a bit easier in terms of the reporting of the payroll taxes, or has less state regulation in terms of payroll taxes. We here are going to be working with the manual system, so that's going to be the easiest system. You can set up the manual setup if you want to look up in the prior presentation when we set that up, and just to get a practice problem, it will provide you the information, and it's almost better to practice with, because what will happen is instead of the system creating and calculating the federal income taxes, withholdings, FIT, Social Security, Medicare, we'll have to put those numbers in, and it'll look the same, but by us putting it in there, it'll help us to see what is happening in payroll. Your other option on payroll is to outsource it to something like ADP or Paychex, and if you do that, you still need to know what the journal entry is, because you're going to have to put it into the system, at least in a journal entry form, so that it's on the financial statements. And this system will help us to understand what that journal entry is and how you might read a report from ADP or Paychex, how you might integrate your systems with theirs in some way. So once you set up payroll within QuickBooks, you'll have this icons. Before you set this up, you may not have this arrow here. Once you set it up, and you can set up the free version just to practice it and then upgrade to a paid version as you would like, then you will see these items. Now we're going to pay the employees every pay period. In our case, every month, but it could be bi-weekly, semi-weekly, or it could be every week. And then we're going to pay liabilities at a later time. So in this case, it's the end of February. We're going to process the payroll. We got the 2 employees that we're going to be paying for, and we're going to say pay employees. If we go through the process here, there's 2 dates we have. We got the pay employees for the period end. That should, after the first payroll period, populate automatically because it knows that you're paying, in my case, monthly, so it's going to populate the end of the month. The paycheck date should be the date that we write to the checks, but obviously we're working a problem in a different date than the current date, and therefore I'm going to put the date as the same date, 02/28/21. So we're going to say the pay period ended, and we're writing the check at the same date. That doesn't necessarily have to be the case. We're going to take it out of our checking account. If you have another payroll account, then clearly you would be putting it into the payroll account and then taking it out of the payroll account. Print the checks? No, we're not going to print the checks. We are going to have the just enter the checks as if we were printing them in another format and just inputting the data so that it will be there for the financials. If you were to print the checks, then you would have the checks that would be already set up that you would have to put into the printer in the right format, and then make sure the check numbers line up as they should. If they're the pre-printed and everything's been going along in the same format, that's an internal control to the paychecks. Then you can print those out as you run the payroll. We're going to select our 2 employees here. We've got Adam and Erica, and say continue. We will continue with this. And then what we need to do is go through here. We got the gross pay but no taxes, no deduction, and no employer taxes. That's because we're using the manual system and we got to calculate those manually. And therefore, we're going to go through here and take a look at that. And it will be helpful to do this too, because it'll give us an idea of what's going on rather than just processing the system and hope QuickBooks, magically does everything correctly. We can have some idea of what QuickBooks is doing here. So we've got the salaries. We've got the $4,583. That's going to be the gross pay. That's what this employee has earned, Adam. And we're going to take out then the payroll taxes that need to be taken from the paycheck. These are the payroll taxes of the employee, not the employer, not ours, the employee, Adam. And we're going to take his employee taxes out. So I'm going to put down here the 3 taxes are going to be that we're going to withhold are going to be the federal income tax. This is going to be derived from the W-4 in terms of marital status. It'll be in terms of how many exemptions that are reported, and then we'll have to look that up on a table based on that and the fact that we're paying monthly. That's the table you're going to take a look at if you're paying monthly versus bi-weekly. So in any case, this is a bit more complicated one for us to figure out. We got to look at a table to figure that out based on the correct table, and based on marital status, and then based on how many exemptions, and we're going to get that. Now the Social Security and Medicare is usually a bit easier because it's basically a flat tax, which means we're just going to take the gross salary and multiply it times some rate, which I believe right now in this problem is 0.062. So if we multiply the 4,000, let's just do it real quick. If we multiply the 4583.33 times 0.062, or 6.2%. If we move the decimal place over 2 places, 0.062, we'll get the 284.16. So that's what we should have here. I'm going to put the negative 284.16. And then on the Medicare, if we were to calculate that out, that one should be fairly easy to calculate too, because it is a straight method. Typically, it's going to be 4583.33, that's our gross pay, times 1.45 or 0.0145. If we move the decimal 2 places over for a percent, 0.145 or 0.0145, that will give us the 66.46. I'm going to round up, so we're going to say negative 66.46. Now, this is just an example problem, so those percentages are just to show you an idea of how the percentages would be calculated. If you want to calculate these percentages, I would talk to a professional to calculate the percentages. Make sure you have the current percentages. The point here is that the federal income tax is usually a bit more complicated because we have to use tables in order to figure that number out. The Social Security and Medicare is a little bit easier, typically because it's more of a flat rate, and therefore usually that's going to be easier to calculate. The federal income tax, if we mess up on the federal income tax, the estimate's never going to be perfect, of course, because it's just an estimate on a very complicated tax system that has a progressive rate system. So when at the end of the year, that's what happens is you get a refund or you owe money based on your withholdings, of course. And we're hoping that the tables are set up so that generally, if everything is set up and known within the table would result in a slight refund at the end of the year if this was the only income to that employee. But of course, in real life, there's a lot of other factors. So in any case, this one's a bit more complicated to calculate. This one's usually a bit easier. These two have to be fairly exact, however, because we don't usually get a refund or owe money at the end based on the Social Security and Medicare. It needs to be exactly the correct amount. All right, so we're going to say then we have our side of it. So that means that we have the check here. We pulled out federal income tax, Social Security, and Medicare. That's all we're going to do for this example problem. There are other employer taxes, FUTA, for example, and the state taxes that would have to be taken out depending on where we are at. These, however, will be fairly standardized, and those will be there in any area, and that'll give us a good idea of what is happening here. And then we have the employer side. On the federal taxes, we have to pay and match, in essence, the Social Security, which is $284.16. We're going to pay on our side the employer taxes. And then we have the Medicare, which we're going to match 66.46. And I'm not going to do the federal unemployment at this time. It's usually a much smaller rate, but we're not going to deal with federal unemployment because it's in some ways dependent on state unemployment, and we're not going to deal with the state stuff. So we're going to stop there. So note we have this is the salary, this is the net check, this is what we pay on that. Now we're going to do that for one other employee. So if we select tab, this employee is an hourly employee. So we're just going to enter the number of the rate in this case, which we have 20. That's what we're paying this employee. And we're saying 40 hours is what we have. Therefore, we've got the 800 here. We'll do the same calculation. The federal withholdings, we would have to look at the table based on marital status and exemptions. And we're going to just say that that's going to be 110. And then the Social Security and Medicare, we'll calculate that out this time using this rate. For an example, 800 gross pay times 6.2% or times 0.062 times 0.062, 6.2%. That'll give us 49.6. So I'm going to put that here, 49 and 60 cents. And then Medicare, we'll calculate that out. Same gross pay times 1.45 or 0.0145, 0.0145. So that's 1.45% or 0.0145. And that will give us the 11.6. So we're going to say negative 11.60. Again, I don't mean to have this completely exact, just mean to give an example of how these calculations would be calculated depending on whatever rate is currently there, and make sure to check in on that and get the correct rates. So then we're going to have to match it on our side. So we've got the Social Security that we're going to have to match on the employer side, 49.6. And then the Medicare, which is going to be 11.6. We're not going to be dealing with the federal income tax. And then I'm just going to say save and close. Populated now for our two individuals. The net check then to them, $3,512.71 and $628.80. Now, if we were trying to think about what's going to happen when we record this thing, we're going to make these two checks. The two checks will actually be written for this amount and this amount. It will also create the check stubs having all the detail on it, meaning it'll tell them what the gross pay was and what was taken out in terms of taxes and the grouping of why, Medicare, Social Security, and federal income tax. In terms of the journal entry, we know cash will go down not by the gross pay, not by this amount, but by this amount. And we can think of the journal entry as what's going to happen in total or by paycheck. If we think about it, what happened by total, we can kind of think about it as what the minimum we would have to input into our system if a third party was to do the payroll, and then we had to enter that data so that our financial statements included that data. In other words, we see that the cash would go down by the $4,141.51, but the payroll expense was actually $5,383, the gross pay for these individuals. So the payroll expense would be this, increasing the expense. The check, however, would only be this, and then we would have to record the difference, which is the taxes that we took. That's federal income tax, Social Security, and Medicare. That would go to payroll tax liability, a payable account, which we would then need to pay out at a later time with another check that we would write for to, in this case, the IRS, for the amount owed. And then we would also have the employer portion of taxes. Here, we had to pay this Social Security and Medicare on top of what we took from the employees out of their paycheck, and that would be increasing the payroll taxes, which QuickBooks just puts in the payroll expense as well, and it would be increasing a payable as well, which QuickBooks is just going to put into the same payable that is owed to the IRS. So let's create this and we'll take a look at it. We could record this net like that. When we look at the detail in our system, we'll see that it'll be broken out not only by just that one journal entry, but by the accounts, by the number of employees, and we'll see the breakout and see how that works. So we're going to say create paychecks. There we have that. We're not going to print the checks or the check stubs. I'm just going to close this out. First, we might want to check the check register to make sure that those have been created. So we can go to the banking, we can go to use register and checking account. And there's our two checks. We can see that they are paychecks rather than just normal checks or pay bills. If we double click on it, we have to double click right on that little item where it says paycheck, by the way. Then we can see our net pay, our activity. It's all lumped together, however. If we want to see the detail, we go to Paycheck Detail, and that will give us our breakout of the input screen. Closing this back out, closing this back out. We can then take a look at our reports, go into the reports, go into, we're going to Company and Financial, scrolling down to the balance sheet, changing the dates. Up top, Customize Report. Date's going to be 01/01/212/31/21. And we're going to say OK. So here we have our information. Now we think the checking account went down, so we'll double check on the checking account. Scrolling down, we see our two paychecks here. If we double click on either of those, there's our information. If we want to see more detail, paycheck detail, we can see the information there. If we close out of this, close out of that, and close out of this, we are back to our balance sheet. In the most simplified format, you would think the other side of that will be on the income statement as an expense, or the profit and loss as it's called in QuickBooks. So we'll go to Reports, Company and Financial, Profit and Loss Standard, changing the dates from 01/01/21 to 12/31/21. January 1st, 2021 to December 31st, 2021. We see the account Payroll Expenses. That's going to be the other side of this transaction. If we double click on the Payroll Expenses, we scroll down and we look at our two items. Now it's broken out into a lot more detail. This is going to be a little confusing when we look at the activity, because we see more than just one line item for the entire payroll that was recorded. It's broken out one by these. Looks like these are the two checks we just wrote. And we have the checks that were wrote. This is going to be for the entire amount, including gross pay, including the amount that was taken out for payroll taxes from them. So this is gross, not net. And then we included also in here, they're not breaking out, QuickBooks is not breaking out payroll taxes to another account, these being the employer portion of Social Security and the employer portion of Medicare. This being the gross pay for our second the employer portion for Social Security, the employer portion for Medicare. So you can see if we have a lot of employees, this detail can be a bit confusing. When we think of it as an aggregate, then we would enter it just as, basically as one line item, which means that we would just have one line item for the entire payroll. And so you can think about it on aggregate, the entire payroll, posting it with one journal entry, just combining all of it together, or looking at the detail, which we're seeing here in the transaction report, breaking out this information by employee. We can look at more detail here. If we double click on any of these, we see the check and we see the check amount. This is the gross pay, not the amount that the check was written for, not the net amount of the check. If we want to see the detail, then we see that the difference then, of course, is the employee portion of Social Security, Medicare, and their federal income taxes. So when we record payroll expense, we record it at gross, even though we took out their taxes here, because we then need to pay the government, in this case the IRS, for their taxes. And then we record our side, Social Security and Medicare. So what we see in the detail is the gross pay, 4583.33, and then our portion, Social Security and Medicare, not breaking out their portion of Social Security and Medicare, because that's just part of the employee's payroll expense. So if we close that back out and close this back out, that's what we see here. We see the gross pay, our Social Security, and our Medicare. If we see the second payroll check, same thing. We see the gross pay here, not the net pay. Detail, we're seeing the gross pay, 800, not pulling out their Social Security and Medicare, and then separating our portion of Social Security and Medicare, the employer portion. And that's what we see. So we see the 800 and then this 4960 and this 1160 in the detail. Let's close this back out. Close this back out. There's the 800. There's our employer portion of the 4960, employer portion of the 1160. Closing that back out. The other side of this will be back on the balance sheet. If we go into the balance sheet, we see that we have a payroll liability. Scrolling down to the liabilities. Payroll liability here, if we double click on that, we can see the detail. And again, it's breaking out all the detail here. If we look at this last check, we've got the 1110, looks like the FIT, federal income tax, and then the Social Security for the employee, the Social Security for the employer, the Medicare for the employee, the Medicare for the employer. So when we're thinking about the total taxes we owe in terms of payroll tax expense, it's breaking out by line item and by paycheck within the transaction detail. So once again, this is one employee, and we're saying there's 110 that we owe to the federal government in this case for federal income taxes that we took out of their paycheck. We owe $49.60 for the Social Security that we took out of the paycheck that we got to write a check to the government for. We owe $49.60 for the Social Security that we owe based on their wages for the employer side. And then we have an $11.60 for Medicare that we took out of the employee's paycheck that we owe to the government. And we have the $11.60 that we owe based on the employee's wages, the employer portion. If we double click on any of these, we're going to go to the pay check here again. We don't see the paycheck amount, the net pay, or the gross pay. We see this activity being broken out here, the taxes, what is owed in terms of taxes. So if we look at the detail, what we see and the accounts payable is the 110, what we owe for federal income taxes that we took out of the employee's paycheck, the 49.60 that we took out of the employee paycheck for Social Security, the 11.60 that we took out of the employee paycheck for Medicare, and then our portion of the 49.60 that we owe, and our portion of the 11.60 for Medicare that we owe. So if we close this back out once again, there's the federal income tax, there's the employee portion of Social Security, the employer portion of Social Security, the employee portion of Medicare, the employer portion of Medicare, broken out by, in this case, one paycheck. Same information would be up here for the second paycheck, and if we had more than 2 employees, you can see that this would be a detailed transaction by account report.